Perth's southern suburbs are among the worst in the country for the number of people falling behind on their mortgages. But in some encouraging news, recent figures show fewer WA households are defaulting on their repayments.
The latest research brings good and bad news for WA homeowners. The good news, we're better off than we were a year ago. The latest Fitch housing report shows that overall there's been a drop in the number of WA households that have fallen more than 30 days behind in home loan repayments. Released in September, the report shows around 7 out of 1,000 mortgage holders in WA are behind, but that's an improvement on results 6 months earlier.
So the interest rates are certainly a big factor. A decreasing interest rate and having a bit more cash flow around has certainly helped get in front or on track with your mortgage.
On the downside, some areas in WA are really struggling and among the hardest hit in the nation. And this is where it's being felt most of all. The southern postcode of 6167. Suburbs like Casuarina, Callista, Kwinana Beach, Parmelia and Anketel. The postcode is ranked 12th in Australia when it comes to falling behind in home loan repayments. Areas like Ballajura in the north and Swanview, Midland and Baskerville in the east are also double the WA average. Better performing suburbs are those closer to the city.
And that's generally because those people within those central areas are a bit more affluent, have a bit more money coming in and can afford their mortgages and stay in front by quite a bit.
When it comes to the worst regions of Australia, country WA comes in third.
This is double the average of, generally in people in Western Australia altogether. So certainly some concerns. Some of the main reasons why we may see this is just changes in jobs. So a lot more redundancies now.
Even though the number of houses being repossessed is quite low, Curtin University researchers have found that 1 in 7 WA households are under mortgage stress. And it's even worse in the rental market, with 1 in 4 under financial pressure.
Average households are around about 2 years ahead in terms of their mortgage payments, so it gives you a buffer between that period if you lose an income before you end up defaulting.
Finance experts say to avoid repossession, aim to have an emergency fund between 3 to 8 months of savings. Make sure you're insured. Talk to your credit provider to come up with a new arrangement or consider refinancing. Lee Steele, 9 News.